Today, we are discussing rollovers for business startups, or ROBS. In short, ROBS will teach you how to use your retirement funds, tax-deferred, penalty, and debt-free. This innovative resource has become the fastest growing form of funding to help someone start, acquire, or grow a business. Two ROBS experts have created a series of comprehensive educational videos to help you become an educated and successful entrepreneur. The first, Larry Carnell, is the National Award-winning Entrepreneur of the Year, business and franchise expert, and Vice President of Benetrends Financial, the company that discovered this legal pathway in 1983. Carnell is recognized as one of the country's foremost ROBS experts and is credited with helping introduce this creative funding, wealth-building protection program. Joining Carnell is CPA Gary Bohrer. Bohrer holds a master's degree in accountancy and is considered a leading national expert on ROBS structures. He is also a business lecturer and contributing author on ROBS and C Corporation structures, which can help maximize your exit strategy benefits while minimizing your taxes. In addition, Bohrer runs his own practice where he advises and works with entrepreneurs with ROBS-structured businesses across the United States. Are you able to pay yourself a salary?
That's kind of a yes and no. It's dependent on the firm you use and how they structure their plan, whether they allow you to pay yourself a salary or not. Technically, if you have a program where 100% of the stock is owned by the retirement plan, then when you transfer or roll the funds over and invest it in the C Corporation, the funds become owned by the C Corporation. And provided it's reasonable and customary, you can pay yourself a salary. We've been doing this for 35 years. We've never had a single issue where that's been an issue. However, you cannot put $150,000 into your business and then next month take $150,000 out. They would consider that a prohibited transaction, so that's a legitimate concern. I think part of the confusion comes into play with self-directed IRAs. That's primarily used for people buying real estate. They go out and buy a duplex and then they're taking a salary out. Well, you can't do that with a self-directed IRA. That's one of the limitations of an IRA versus certain types of company retirement plans. With a company retirement plan, you can pay yourself a salary. In fact, in actuality, you have to be an employee of the company. If you're an employee of the company, even federal law requires that you have to pay your employees minimum wage. So provided it's properly done, it's not a problem. What types of questions or concerns are you running into, Gary?
Well, it actually comes in on both the initial salary and eventually a higher salary 4 or 5 years down the line. The initial salary, and I would suggest that having special meeting minutes on how you chose or how you got to what is a reasonable salary depends on figures. The IRS actually has a set of weighted factors that you can run through for what they deem to be consideration. And that might include your prior experience, what other franchise, if it's a franchise, what other franchise owners are taking money out. But at first, it's a matter of cash flow, and you have to be able to use your personal, or you need personal transition bridging power to be able to live while you build your business. At the top end, let's say that you're making $350,000, you would have special meeting notes. You might be able to get away with that, but on audit, they might cut that by $100,000, saying you're only worth $250,000 for various reasons. And then, of course, that leaves that $100,000 out there for double taxation.
Right, and the burden always rests with the business owner to justify that it's reasonable and customary. But be aware there's other alternatives as well. You can pay yourself a salary with certain programs, including ours. But the other option is to take a distribution. Another option is to take part of the retirement funds. Let's say you have $200,000 in your retirement plan. You invest $150,000 into your business. You'd have $50,000 remaining. You can actually do a participant loan, borrow the money from yourself, typically at prime plus 1 or 2%, and pay it off over a period of 5 years. Now, even though you're paying interest, understand that interest is not going to some banker. It's going directly back to you. So the net cost is zero. It's like having 0% use of your money. So a full service design firm can give you multiple options, either paying yourself a salary, a distribution, or a loan provision. It's always better as an entrepreneur. What I've learned is it's always better to have more options than not enough. Now, Rob's video number 9, we're going to be talking about Rob's programs versus other funding options.
Okay.
Okay.